Good morning, everyone, and welcome to the presentation on how to effectively trade key market reports on Forex. My name is Gail Mercer. I'm the founder of TradersHelpDesk, and I will be your hostess this morning. Now, before we get started, I would like everyone to take just a few moments and read over Trading on Nadex risk disclaimer. Basically, anytime you're trading, including binary options and spreads, there is risk involved, and you should never trade with money that you cannot afford to lose. Now, for those of you that do not know me, I wanted to give you a little bit of background information. Basically, I've been trading well over 15 years now. I started out with a company that actually programmed indicators and just simply fell in love with the price bars. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities magazine, Traders World, and Top Shelf magazine. I've also been a speaker at the Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of 3 books on trading Nadex binary options. They are Trading Nadex Binary Options Using Currencies, Trading Nadex Binary Options, Keeping It Simple Strategies, as well as the New Trader's Guide to Trading Nadex Binary Options and Spreads. Now, some of the issues that as a spot Forex trader that I encountered was, number one, when you're trading Forex, you don't pay a commission. It's actually a Pip Spread, and it's the difference between the bid and the ask. And any time that there was a major market report, those Pip Spreads would increase dramatically. And a great example of how those could increase was when we had the Brexit vote. The Pip Spread on the British pound dollar actually increased to 150 pips. I mean, that's huge, okay? And that's what you're paying as you're trading that market. Now, additionally, the market can go against you, okay? You know, and it's very hard when the market spikes against you to get out of that market. Again, if you go back to the Brexit vote, the British pound dollar, the British pound dropped 300 pips in the matter of about 5 seconds, okay? So to get out of your position, if you were long, and there were a lot of people that were long that night, was very difficult, and some people got margin calls because it just moved faster than what they could get out of the market. And to me, that is the leading issue, okay? Now, how can you overcome these issues if you're wanting to trade a market report that includes Forex? Well, the best way is with Nadex binary options and spreads because it limits your risk. And that means if I agree to, for example, a $30 risk, I pay that on entry, I cannot lose more than that $30. So I have capped my risk as I go into that market. So even if it goes against me, I'm not going to be in a state of panic because I know exactly how much my loss is going to be. Now, with binary options, price simply needs to be greater than the strike for long positions or equal to or less than for strikes on shorts. Now, what does that mean? Let's say that you're trading a market report. You expect the market to move 20 pips, but it only moves 5 pips. Well, it doesn't matter. As long as it closes or expires in your favor, okay, then you could potentially make money on that binary option. Now, spreads, you have a limited risk, and if you are going long, you can buy the floor, and your risk is limited by the floor and the premium on entry, okay? The profit is only limited by the ceiling, okay? On the shorts, in other words, you're selling a ceiling price, then your risk is limited by the ceiling price and your profit is limited by the floor price, okay? Now, on the following slides, I'm going to show you the historical move for the 15 minutes after a key market report, and this is from data that I have gathered over the last 5 years, okay? Now remember, the historical moves are historical. That means it's not necessarily indicative of a future move, okay? The average is measured from high to low on the 15-minute bar immediately after the market release, okay? Now, this is the Aussie dollar reports, and this just kind of highlights the ones that I would prefer to trade because there's substantial movement in it. One is the unemployment number. You have employment change and unemployment rate. The Aussie dollar typically on average from my data moves 41 pips off of that report. Now remember, this is within 15 minutes. The Aussie cash rate in statement, 50 pips. Again, that is on a 15-minute bar measured from high to low based on the data that I have gathered over the last 5 years. Now on the euro, you have the German ZU, which moves 20 pips. This is something that most people don't know. They actually try to trade the rate announcement, but the actual move on the euro comes at the press conference, not the rate announcement. And typically your move is on average 80 pips immediately after the market report. The German IFO business climate, 20 pips. The French flash manufacturing PMI, 24. The German flash manufacturing PMI, 27 pips. Okay, so now you can identify what is an average move. Okay, now on the British pound, we have several market reports. The manufacturing PMI is 31 pips. The construction PMI is 17 pips. Now, I put that in there to highlight for you that on the British pound, with the construction PMI, this 17 pips tells me I probably do not want to trade that. Why? Because it's really not a significant move on the British pound. The services PMI, 34 pips. The official bank rate, 56 pips. Manufacturing production, 22. Retail sales, 43. CPI year over year is 43 pips. Again, I like to target the ones that move the most, which would be the bank rate and the CPI. On the US CAD, you've got the trade balance, which will move 45 pips. You have the IV PMI is 29. The unemployment rate is a big one for Canada and moves almost as much as the rate statement. Okay, 78 pips in one 15-minute bar. You also have manufacturing sales, moves 28 pips. The Bank of Canada, 80 pips. Core retail sales, 48 pips. The GDP, 49 pips. Now, all of these, with the exception of the IV PMI, I will actively trade. There are big movements. Well, the manufacturing sales also, I do not trade. But all of the others, I will actually trade. What does PIP mean? 31, 17, 34, etc. That's how much the market moves, Susan. in a pip is one increment in Forex, okay? So 45 means 45 pips or 45 ticks. I'm not referring to half pips, okay? Nick, do you have this data in PDF anywhere? No, I do not, okay? Now, on the USD JPY reports, the only ones that I actively trade would be the monetary policy statement, which is 26 pips, and the press conference, which is 18. By far, my favorite is the monetary policy statement, okay? That is your biggest mover on the USD JPY. Now, why does this matter? Okay, well, I like to trade out of the money binaries, and this allows me to say, okay, how far out of the money can I actually go? And some of this depends on your strike width, okay? A great example is this one on the Aussie dollar. I wanted you to visually see this. The employment change and the unemployment rate historically creates a 41 pip move, okay? And that's immediately after, within 15 minutes. The strike width on the Aussie dollar is 4 pips for a 2-hour binary option. Now, just showing you this chart here, okay? 8 pips away is, you can actually get that for $13.50 on this particular chart. And I think this was from yesterday. Down here, if you go 8 pips down, you could actually sell that one for about $25. You're expecting a 41 pip move, okay? Now, what I do, especially on these that only have a 4 pip spread, I will divide that by 2, which basically comes into 20 pips is what I'm expecting, okay? Now, if I'm expecting a 20 pip move, and this is really based on what I do historically in my own trading, okay? If I'm expecting a 20 pip move, I need a 2-strike move in my direction. That means if I need 2 strikes, that's 8 pips, all right? And I need it to move in my direction by this amount. Does everybody understand this so far? Because I don't want to confuse anybody on this. So that means if I go 2 strikes out, I still have room for it to move an additional 2 strikes. So I'm here at the 2-strike line, okay? But I have allocated room for an additional move of 2 strikes. Do you understand that? In other words, I'm using an out-of-the-money binary, anticipating price to move at least 2 strikes in the money. Does everybody understand that? If you have a question, now is the time to ask me while I have this chart up. If I'm going short, again, I want to allocate at least 2 strikes in the money, okay? And that means I will only go out to the 2nd strike or up to the 2nd strike, okay? Where can we find out information about the market reports? I use Forex Factory to look up all of my market reports. What do you mean by allocate? I mean, when I'm sitting here and I know that the employment change is coming out, okay, then I know there's a 41 pip move. I'm going to take half of that, okay? Because sometimes it doesn't move the full 41 pips. So I want at least a 20 pip move, okay? Again, I'm going to go out of the money, okay? But how many strikes can I go out of the money and still be 2 strikes in the money at expiration? Yes, 41. Well, it's from high to low. You know, when you say in one direction, that actually is subjective. What are you measuring direction with? Okay. All right. This is what is considered the at the money strike. Okay. And this would be pretty much at the money for both going long, yeah, going short too. You're still, this is your at the money strike, okay? If you're going long, this is your out of the money. If you're going short, anything below price is out of the money, okay? So you have the at the money strike, and then you have out of the money for long and out of the money for shorts. Okay, how far out of the money can I go? Because the further out of the money you go, the lower your risk is, okay? Here's an example. If I went 1 strike out of the money, my risk would be $25. If I go 2 strikes on this particular chart, it would be $13.50. Does everybody understand that? Where price is trading is at the money. In the money means that price is either trading above or below, depending on whether you're long or short, but literally it is in the money. Okay? So in this case, if I was long, my in the money would be below price. But if I am short, this would be the in the money because it is above price. Does everybody understand that now? Now, you could look at this 41 pip move and say, wow, I could go out 10 strikes. You're probably going to pay maybe $5 for that, okay? Instead, I say, okay, I'm expecting at least a 20 pip move, okay? But for me to achieve my profit target, I need this to move 2 strikes in the money, okay? That means if I am long, then it has to move 2 strikes above where I am to actually achieve my profit target. Now, again, this is on average, okay? If I'm right at expiration, I could do it with price moving less than 1 strike up, okay? This is on average based on my experience, okay? Does everybody understand that? Now, if I'm targeting a 20 pip move, okay, if I go 2 strikes out in my out of the money, and this would be out of the money, 2 strikes, that would be 8 pips, okay? And to get my profit target, I need it to move an additional 2 strikes, okay? So this would be 8 pips as well because the strike width on the Aussie is 4 pips, okay? So total, I need a 16 pip movement. Does everybody see how I calculated that? The strike width is determined by Nadex, and it's actually listed on their site, Wesley, under the Forex market. Okay, I'm expecting a 20 pip move because I divide this average by 2. So I'm just going to say 40 divided by 2, and that equals 20 pips. Okay? I cannot go further than 20 pips. All right? But because I use profit targets to come out of the market, I know that on average, I have to go 2 strikes in the money. Okay? So if I go out of the money 2 strikes, that's 8 pips. To achieve my profit target, I have to move 2 strikes. That's another 8 pips. So in this way, even if I get a 16 pip move in my direction, then I am going to achieve my target more likely than not. Does everybody understand that now? Okay. Any other questions on that one? Okay, what about spreads? How many of you in the room actively trade spreads? Anybody in the room trade spreads? Spreads are absolutely great for market reports, okay? So next Wednesday, I'm doing a presentation on spreads, okay? But it is an excellent opportunity to trade market reports. Here's why. All spreads consist of a ceiling, which is on the left-hand side of price, the left-hand side of the strike, okay? The floor is always on the right-hand side, okay? So this is your floor. I think I got my arrows wrong. And this is your ceiling, okay? Now, let's say that I want to buy the Aussie because I think at the market report, it's going to go up. Remember, this is a 40 pip move on average immediately after the market report, okay? And I want to buy the floor, okay? So in this case, I'm going to buy the floor, and that means that I'm going to pay the offer price. My risk is my offer price minus the floor, or $3. That would be my risk. Does everybody see how I calculated that? Now, notice that the offer is at 76.23. This is what I pay on entry. But this could move all the way up past 77.20, okay? And let's say this is 77.20 here. It could move up to 7,800, okay? It doesn't matter. My profit is capped at the ceiling. So even if it moves up to 7,800, my profit is capped at 77.20. What would I make on this particular spread? okay? On this particular spread, if I paid $76.23 on entry and it did move up to $7,800, then my profit would actually be $97. Do you understand that? Because this number, the ceiling, is going to limit my profit. Okay? What if it only moved 76.25? Okay? In that case, I would have made $2. What if it was at 76.23? Then is what I call a scratch trade. I didn't lose any money. It's a break even. Okay? Let's say that it was at 76.22 at expiration. In that case, I've actually only lost $1, and the remaining $2 that I paid on entry is returned to me. Does everybody understand that? Now, my best case scenario is I risk $3 to actually make $97. That would be my best case scenario. My worst case scenario is I would have lost $3. Do you wait until the market report to choose direction? No, I do not. I'm in before the market report is released. And I think that's a trader's preference more than anything. Now, remember also that this is actually to buy. Everything that I just explained was buying the floor and profit limited by the ceiling, okay? What if you're going short, okay? If you're going short, okay, then you're selling the ceiling and the profit is limited by the floor, okay? Does everybody understand that? And I really suggest that you join us next Wednesday for the presentation on spreads if you are not actively trading spreads right now. Any questions on this at all, guys? Okay. Now, I do want to give everybody my contact information in case you have any questions or want to visit my website. My website is TradersHelpDesk.com, and my email address is gm@TradersHelpDesk.com. A bit off topic, but can the time zone be changed in Nadex? To be honest, I don't know, Wesley. I've never tried to do that. Well, there's actually, Jerome, reasons why you would use a spread versus a binary, okay? Does anybody in the room know what those reasons are? If I'm not expecting a major move, okay? In other words, price might just sit there, or it may just, what I call, meander into an area. I'm going to use a binary option. You're not expecting a big move. If, on the other hand, I am expecting a major move, okay, then I'm probably going to do a spread. This morning on the indices, great example. Yellen is testifying today, okay? Anytime Yellen speaks, you typically get spikes, okay? So you're going to have a big movement because Yellen is speaking, and based on what she says, the market may go up or the market may go down. Excellent spread opportunity, okay? But on a Monday, not expecting a big move. Everybody's getting back to their trading desk, and it may or it may not move. I'm going to choose a binary. Gail Mercer. Jeff? Do you advise doing a strangle on binary options? Sometimes it just depends on the scenario. You know, you have to have different ways to trade the market because the market moves in different ways. Okay? To